Hello students, in this video we are going to see about the fraud and responsibility in auditing and assurance service. Fraud and responsibility in auditing. Fraud and detection generally refers to the identification and prevention of descriptive activities typically in such as finance, insurance and e-commerce. Fraud is a deliberated act of deception intended for the personal gain or cause harm to others. In the context of auditing, prevention and detecting fraud is a crucial aspect of ensuring the integrity, financial report and maintaining the public trust in the reliability of financial information. Fraud involves intentionally deceiving someone's personal or financial gain. Financial fraud, credit card fraud identified the theft, emphasizing, and insurance fraud for false finding, online fraud. Every fraud will be have certain loophole for identifying. Fraud detection is a process of identifying the fraudulent activities before they cause harm. Rule-based system. Predefined rules easy to be implemented but can misuse the new fraud patterns. Machine of learning AI. Nowadays, the AI plays a dominant role in this electronic boom. The AI can identify the fraudulent activities, whatever happened, may be used for the identification. Statistical techniques. Statistical techniques through regression analysis and statistical tools, the fraudulent activities can be identified. Behavioral analysis tracks user behavior and flag detection can be, behavioral analytic pattern can be used for helpful for the fraud detection. And next one we are going to see about the responsibility of the auditor. It means a management. Management plays a dominant role while doing an audit. It's the management duty to organize the auditing and to do the auditing work without any problem. So auditing work has been done it properly. An auditor's primary responsibility is to express an independent opinion on organizing the financial statement, ensuring that they are fairly presented in a compliance with the generally accepted accounting principles. This involves examining the financial record, evaluating the internal control, assessing the risk to provide the reasonable assurance that the financial statement are free from the material misstatement. Management holds the primary responsibility for preventing and detecting fraud within the organization. Management is responsible for establishing and maintaining the internal control designed to prevent and detect the fraud, including the policies, procedures, and monitoring mechanisms. Management is also responsible for creating a culture of honesty, dignity within the organization, which includes setting the tone at the top of the emphasizing the ethical behavior and compliance with the laws and regulations. Responsibility of an auditor. It is an auditor responsibility to check the financial statement. Accuracy. Accuracy is very essential for doing the auditing work. It is the duty of the auditor to check the balance sheet and income statement and cash flow statement properly without any delicate. Materiality. Auditor assess whether any misstatement of the financial statement are significant enough to affect the overall financial picture of that company. And responsibility of an auditor. Auditor have a the auditor or have the responsibility to assess and risk of material misplacement due to frauds during the audit engagement. Evaluation of an risk assessment. Auditor evaluate and effectiveness of an organization's internal control to identify and mitigate the potential risk of errors and fraud. To examine the process and the system to ensure that they are working as an intended to safeguard the asset, maintaining the data accuracy and ensuring the compliance. Fair presentation. Auditor provides an option on whether the financial statement fairly the company's financial position and operate according to the gap. Audit report. The issue of audit report that includes the opinion along with the relevant finding and qualification, and through that report we all can identify that the financial statement of that company can be identified easily. Then, while auditors are not specify the responsibility, it is specify the responsibility. Duty for the auditor to reveal the full picture of that concern. The auditor performance. The auditor may consider the risk management overriding of the control and the potential for the conclusion among the employees where design and audit procedure. In the case whether the audit suspected fraud, they may expand with the procedure and encouragement and forensic specialized investigation for further fraud detection. As we seen in the previous video, the communication and reporting. Auditor are required to communicate any identification instead of fraud management if any necessary audit comes the board of directors. If the fraud involves an illegal acts or violence of law or regulating, the auditor may have the duty to report it with the regulatory authority such as a law enforcement agency to regulate that body. So it's an auditor's duty to detect the fraud while doing auditing work, and it is a duty for the auditor to give a proper financial report of that company so that the company can take it over to that for their development of that company. Thank you.